Hello and welcome back to the channel. So I'm going back to basics now. It's been a while since I've done an ISA update, so I thought I'd deliver one to you. Currently invested 10,237 and 85 pence with a total return of minus 19.78%. Yesterday it actually got up to just under the 19%. Which was amazing, but it's not been a bad week. Kind of last weekend I was on about 20.84% down. So as it stands at this very moment in time, I'm 1% up on the weekend, which isn't too bad, I suppose. A few changes to the portfolio. I sold out of Shell and at a small profit, and I redistributed that money elsewhere. Aviva have gone on a marching spree. Brilliant week for them. Up just over 15% on these now. That's really good. Look forward to receiving dividends from them. Babcock seems to it doesn't seem to go anywhere. It's just kind of always seems to be 40% down. I think basically what I need to do is double my position to reduce my average considerably. My average is just under £4 a share. So if I double my position, that should move to, I want to say $3.15 if I did it right now. But you know, that'd be a huge reduction in the average price. That definitely needs to happen, I think. I'm just reluctant because they're not paying a dividend at the minute, so I'm reluctant to put money where dividends are not coming through. Santander still looking good. It's been a nice month. Actually, it's been a nice 3 months there if you look at that comparison. I did get some free shares from them, and what I mean by that is that they did a share offering where you got so many shares based on the amount of shares you already owned. I can't quite remember what the actual details were, but I think I got another 8 or so shares from them for free. So yeah, I did put some more money into BP recently from my, there we go, bought another 89 of them recently, so that was from the money I made from selling Shell. So that strengthened my position there. Still over 19% down, but that's kind of average based on what the actual portfolio is doing at the minute. Card Factory, it's actually going down over the last 3 months. It doesn't seem to have recovered at all. Now I do know this is probably to do with the lockdowns. Nobody's able to go out and buy cards. It's becoming a bit of a worry. I think I mentioned in one of my other videos about actually doubling my position here for 180 quid. Would double my position and half the cost of the average price of the share based on what it is now and what I've paid. But I don't know if I want to throw more money at it. You know, I'm not confident. I don't want to sell at such a huge loss. No dividend yield from them at the minute. Obviously, that kind of goes without saying. But I'm already £550 down, almost 76%. That's huge. That is really huge. It's the one position that I'm kind of worried about in my portfolio. Basically, because I've lost I'm losing so much on it. You don't lose it completely until you sell out. Sentiment and Coca-Cola, they're both part of the pie that I have. Costain, well, yep, so over the week, kind of up 5% on the week, down 2% on the month, up 16% on the quarter. That's getting there. I think I've still got to sell. No, I've took my sell order off. I did have a sell order on these, but I must have removed it. Everest doing particularly well. There you go. Over the month, it's up 7%. Over the quarter, we're up almost 44%, which is huge. Because before, obviously, earlier in the quarter, I was under, so I was down. If you look at the year, that is ideal, isn't it? That is a lovely return to the green, up nearly 40% on the year. It's getting to the point where we're almost at its high. I think the high was about £6.60, was it? That was just under £7 a share. So I mean, we're getting at that stage now where we're almost at the highs. Big move, and it could happen. Hillian. Now, this is interesting. So I was massively down with these. I'm still massively down, 50% down, still a lot of money. But we had a lovely spike here, which kind of brought me back quite a substantial amount of money. What happened was they've released news that the battery that they have for their vehicles can be charged in 8 minutes, which is a phenomenal amount of time for that to be charged. We are currently just above the IPO price of 17.38. Like I've explained before, I did make some money as it went up, but then I bought back too early, basically. So I kind of traded this one, and maybe I shouldn't have done. Anyway, Imperial Brands, it's been a bad week, down 4.5%, down 11.5% on the month, and yep, down just under 6% on the quarter. So it's not been a good year. They've not seemed to have pulled back from the lows there, the highs of last year. So you can see a sort of diagonal line in the wrong direction on this one, can't you? And this one is one that I'm looking to get rid of again once we hit the green. Johnson & Johnson, Clean Energy, they're both in my pie. Lloyd's, hopefully we'll be hearing about the dividend. It's been a reasonably good week. Almost tipped my cost price there. Month, yeah, we're still looking good. Had a bit of a stumble, but we're looking good. Quite zigzaggy on the 3 months, but overall we're up for 4.5% for the quarter. National Grid, Morrison's, they're both in my pie. Then we have New River REIT. They're due to pay a dividend shortly, I believe. They're a little bit zigzaggy on the 3 month, but they're staying above my cost price, so I haven't added any more at the moment. This month it's kind of been a wonderful U-shape. And for the week, we're doing pretty well. We're growing and growing and growing. So up 13% on the week, that's very good. Paragon Investing Group, I was quite a bit more in the green with this, but so it seems to have, over the last month it's sort of petered down. Was all the way up at 466 there, and then at one point was looking at the 480s mark, 490 there. We broke 490, and again. So yeah, 491 seems to be sort of like a resistance up there. We're on the wrong side of that now. Still in the green, but like I say, I was much higher in the green on that one. Smith News, again, this is another one I'm looking to get out of. It doesn't move a great deal. Almost at cost basis there. We almost hit it in December, but I wasn't looking to get rid of it then. New year, So I've decided, you know, get rid of these, put my money somewhere better. There you go, I've got a pending order there for 32.5 pence a share. Not far from that. Tate & Lyle, again, in profit. These are good dividend pays, I believe. Yeah, nearly 4% dividend on Tate & Lyle. I've had a few dividends off them, that's very nice. Over the year, we're slightly in the red by 5.5%, but we're definitely heading in the right direction now. And the reason I bought Tate & Lyle is sugar. These are sugar manufacturer for people who don't know. Sugar refiner, should I say. Sugar's in everything. You know, the amount of sugar that we have in drinks, and the amount of sugar that's bought off the shelf, you know, everyone needs sugar, basically. So yeah, I think they're kind of a safe sort of dividend paying stock. And then I've got my Vanguards, and they're all in my pie. Hillian being my biggest allocation, BP, Everest, and then Bank of Santander. Have a look at the pie, where we've got £507 value, £439 invested. We've got £32 cash on hand waiting to be invested. That's not quite enough to allocate to the pie, so it's just going to hold it there. We've had £6.15 in dividends since we started the pie, and we've reinvested £5.54. Currently up just over 8%, £35 return. My goal is just a Mickey Mouse goal. I just like to see how close to that I can actually get. Okay, so that'll about wrap us up. It's been quite a long video. If you'd like to like and subscribe, that would be absolutely amazing. Please press the like button, because it does really help the channel out, and it helps me to grow. And that's what we're here for, is growing our income, growing our dividends, growing our investments, and growing our channel. That'd be brilliant. Thank you very much. I shall see you on the next.